Hello everyone, I'm Shivang Mehta. In this session, we are going to analyze PE Analytics IPO and we are going to find out that which type of investor should invest in this IPO. This company is established over 25 years and it is in real estate consulting. It goes with data-driven and customer-centric approach in its business, and it depends upon scientific decision making. Over 500 crore consistent profit company has given in 4 to 5 years according to the financials of the company. So let's go ahead and you know know more about the IPO as real estate consulting is growing growing like anything in our country because of formalization of the economy. So before we get ahead, please subscribe your shop channel for analysis of new bonds, NFO, NCD, IPO, ETF, and many more. Also visit yourshop.com and use coupon code YO100 for flat rupees 100 discount on all products and free 1 year GST and ITR e-filing. Now let's go ahead and find out about the IPO. So, company incorporated in 2008, PE Analytics Limited provide real estate business intelligence and analytics platform. The company owns and operates Pro Equity, which is an online subscription-based real estate data and analysis platform covering over 136,000 projects, 42,000 developers, and across 44 cities in India with 13 plus years of catalog data. PE Analytics Limited offer real estate business intelligence, residential and commercial, research and consulting, collateral risk management, advanced processing facility, reality indices, and catchment area analysis services to various users like developer, construction company, investors, banks, housing, finance companies, equity research firms, real estate PE funds, and REITs, financial institutions, mortgage insurers, HNIs, and investors in real estate. So as you can make out, there is a diversified list of clients from different financial backgrounds who look up to the data and consulting of this firm. So company platform is the only search platform for real estate data and analytics for Indian real estate industry. The company has offices in Gurgaon, Mumbai, and Bangalore. So as you can make out geographically, also company has tried to cover parts of the country. Products offered and IPO objectives. So as we have seen, products offered by the companies are real estate business intelligence, residential, commercial, collateral risk management. Collateral risk management refers to the risk you have to bear while keeping a collateral and raising loan. This is generally taken by developers. Research and consulting, general general people who are looking for house can becomes under this department of the company. Catchment area analysis, big developers who are analyzing the suitability of any location comes under this department. Reality indices are used by the investment banks and other financial companies for the predictions and investments. So company proposes to utilize this new proceeds towards expenditure of technology upgradation, as growing need of upgradation into AI and ML pushes company to invest in the technology. Real estate in real retail initiatives, so B2C expansion plan. So as the commercial and housing market is growing, so company wants to tap retail initiative and retail customers who are looking for house. So can they scientifically decide where they have to buy their house? So general corporate purposes and to meet issue expenses are other IPO objectives. So coming to the IPO reservation and peer comparison. So IPO reservation, QIB has 50%, NII 15%, retail institutional investors 35%, total 100%, around 31 crore amount divided into 27 lakh shares will be issued. Two of the main comparison of the company's latent view analytics, so which has same fundamentals or quite less fundamentals compared to the company, with EPS of latent is 5, PE of the P analytics EPS stands at 6.59, PE of latent view analytics is 75, PE of analytics limited is 17. So as you can make out, the company has valued itself very fairly compared to its peers, while latent view analytics has large scale business with over 30,600 lakh sales and 9,146 lakh profit after tax. PE analytics is in the growing stage. Financials of the company. The company has a asset size of 2,745 lakh in financial year 19, which has grown to 3,678 lakh rupees in financial year 2021. Company's revenue is consistently growing, which but due to COVID, company has also shown resistance and kept their revenue up to the mark. So this can be a a point to consider while investing this IPO. And profit after tax has also been consistent with around 500 crore despite the pandemic closure. Company managed 117 lakh of profit after tax in financial year 20, so shows the resistance of the company in the market. IPO details. So IPO opens on 22nd March, closes on 25th March. It is a book build issue IPO, face value of rupees 10. IPO price is 111 to 114 per equity share. Market lot 1200 shares. Minimum order quantity 1200 shares, and listing will be at NSE SME. So SME is a platform for small scale or micro enterprises to list themselves. So issue size is of 27 lakh 72,000 equity shares worth 31 crore. Fresh issue out of that is 14 lakh 52,000 worth 16 crore, and offer for sale is 13 lakh 20,000 equity shares worth 15 crore. QIB shares offered is 15%, retail shares offered 35%. So there is very high very high weightage given to the retail investors, about 35%, and NI and HNI shares 15%. And so basis of allotment will be decided on March 30, initiation of funds on March 31, credit of shares to demat account April 1, and IPO listing is on April 4. So with minimum lot of 1200 shares, cutoff price of 1,36,800 has to be minimum invested by an investor. So at present, the promoters hold 96% of the company, but after IPO, they will hold 70% of the company. So there will be a dilution of 26%. Strength of the company, strong database. So company has a database of over 13 catalog database of 13 years effectively managed. So that is the strength of the company. High-end technology. Company is moving on AI and ML and various other tools used in real estate. So efficient and talented team. Company has a consistent team and since its inception. So that gives efficiency. Market leadership. Company is consistently growing in particular geographies. Client engagement. So company has great business development strategies. We are going to look ahead when comes to client engagement and esteemed client. The company has high net worth clients which are really esteemed. Weakness. So companies growth depend upon the growth of economy, which in turn will drive housing market and generate revenue for the company. Company's revenue for commercial space depends upon favorable ease of doing business policies of India and government, which in turn will bring companies to India. So this shows dependability on policies of company. Company does not have any competitive advantage as there is no barrier to entry in the industry. So company has fluctuating earnings over the years, which in turn reduce possibility of raising debt for expansion. Therefore, dilution risk lies ahead. So companies, earning are quite fluctuating. So debt might not be the great option moving forward. Despite company's presence in country for long time period, company has failed to establish brand. Coming to the business development strategy of the company. So market research and intelligence team comprises of a dynamic group of real estate professionals with expertise in content development and quality control. So the team is proficient in efficiently collecting and collating content for a huge number of data sources, integrating with the current content management system and generating reports that help clients. So they have a really process oriented business development strategy. So now the fundamental question is, should you invest in this IPO or not? So considering the strong fundamentals, customer-driven products, future growth of real estate industry in the country, and customer acceptability of organized and data-driven decision-making, investors with very high risk appetite can take chance on this IPO, as we have to consider geopolitical tensions and monetary policy, hiccups around the world. Leveraging to subscribe to IPO is not advisable, as IPO might not, give very high listing returns. Thank you. Now you should consider your wealth creation vision and risk appetite before investing in this IPO. Thank you.